Welcome back to Bitcoin Treasuries. I'm here with Matt Cole, the CEO of Strive. Matt, thanks for joining us today.
Thanks, Tim. Happy to be here.
Your X profile says, fighting for freedom through excellence, innovation, meritocracy, capitalism, and Bitcoin. That seems to be pretty in line with the new administration that we have coming in. What do you expect just generally or specifically over the first 100 days, either from executive orders, but also from Congress, in your view?
Yeah, I think the Trump administration's been doing a lot of work to come in hot and make a statement that they aren't messing around when they say that they want to deregulate. And you see all these powerful people come in from Silicon Valley, the smartest people probably in the globe, that want to be part of this administration. And I don't think this is a Trump phenomenon. I think it's actually a moment in time phenomenon that is extremely important for the globe and for America. And I think that's why you saw so many people come in. Why? It ultimately, to me, comes back to AI and this concept that there's going to be 100 years of innovation in 10 years. And so when you actually think through what does that mean? It means that the Trump presidency is the equivalent of 10 average presidencies, 10 presidencies smuggled into one. Yeah. And so it really becomes all that matters is that we as a nation get regulation right. And if you think about that regulation as a pendulum, it's swung too far towards regulation with unclear rules with regards to crypto and with regards to everything you said Strive stands for, where you would see enforcement actions come in, where there was interpretive visions of the law that weren't actually coded in the law. And you'll see these people and it's like, you're going to get fined for this. Novel theory, never been brought before, not actually in the law, but we're going to bring this against you. And that's how America could become Europe. And when you think about what that means, it would mean Bitcoin industry leaves. A lot of that's happened actually over the last 4 years, but I think it could move back with deregulation. It means tech leaves right as the AI boom picks up. And I think if a country messes up for 100 years or 100 years squeezed into 10, that's the end of dominance for a company. That's the fall of a nation. And so I think it was really important. So I think it's going to be really interesting to see what comes down with regards to crypto. I think it's at least 3 things. And those 3 things would be ending the requirement for banks. That means that they have to count Bitcoin and cryptocurrencies as liabilities, which effectively means they can't hold them. So allowing banks to get involved in the crypto industry, which say if you like that or don't like that, but I think that's ultimately been a big headwind for Bitcoin to succeed in this nation. The debanking of people in crypto, I think that ends on day one. And then lastly, the SEC's regulation by enforcement, I think that ends. Those 3 things end unequivocally. It'll be interesting to see, and I don't know if you have an opinion on this, but when a stockpile, a reserve gets announced, my initial view is that I thought it would get announced sometime this year, but I didn't know if day one, but I'm starting to get a little more optimistic that maybe it could, but I'm not fully convinced it will. Do you have a view on that?
My view is maybe day 1, day 10, day 100, just because there's so much anticipation around it that it would be, people might lose their minds if you don't see the announcement. And it might be a little deflating, but I guess we just don't know.
Yeah, and I think it's been interesting to see the dialogue shift between strategic reserve and stockpile. And what that means for the dollar. My view is the bottom line is the US needs to buy a ton of Bitcoin and they need to do it quickly. Yep. And to me, that's the most important thing. And I kind of think that stockpile is the direction that it goes, just in the sense of the US has stockpiles of all sorts of commodities. It's really easy to say. It kind of removes this afraidness of what it might mean for the dollar. And I think many people in the Bitcoin community, myself, for years have called out worries about the dollar and what the dollar will do. Will it be able to maintain its reserve status over the long run? But I think stockpile gets the job done and gets it done in an easier way.
I feel like I like the word stockpile even more than reserve, because at least for me, the connotation of reserve is, it's in reserve for when we need it, but a stockpile is something that you don't necessarily want to use, and if you do use it, you're going to replenish it.
Yeah, I mean, my goal for my own Bitcoin is that it's a stockpile.
yeah. It's not going to be. What's the goal or mission of Strive? Kind of maybe above and beyond what we've already touched on.
Mm-hmm. So our number one mission as we service clients in the financial services industry is to maximize long-run risk-adjusted returns for them. And so when we started that mission, when we said, what is the focus, the product that doesn't exist, that's the most important thing that we can spend our time on, it was saving American capitalism and being a part of that. And from a financial services perspective, I think Strive was the unequivocal leader in the push to reject ESG, DEI, move back to capitalism, meritocracy, because we did not want to, what we talked about earlier, America to become Europe. That would be catastrophic to returns, to innovation, all these different things that have made the American capital markets the greatest capital markets in the world and probably in history. I think with the change in this administration, the American people have spoke and they've agreed with that. And so when Strive started, the consensus view, in my view, is that people were going to brand us as racist. Meritocracy was considered racist, even though it's a laughable thing to say you're going to hire without regards to race or gender. But now capitalism's coming back, meritocracy's coming back. When corporations do that, it's really uncool. And I think the winds have shifted. And so our view is, what's the next most important thing that we could do? And it was, we want to be a part of taking Bitcoin to the masses in a really well thought out way. And so when we talk about Bitcoin, we view Bitcoin and investing in Bitcoin as an asset class, not just an asset. And so you have to think about the individual and what their needs are. And oftentimes it will always involve holding Bitcoin. And we recommend a core holding of Bitcoin to all of our clients on our wealth management platform. But also potentially owning Bitcoin bonds and Bitcoin equity securities like Microstrategy.
Got it. Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent, institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. Can you give us a little bit of a background on yourself and the history of Strive?
Yeah.
Kind of like the origin story, if you will?
Yeah, absolutely. So I've been in the financial services industry getting really close to 20 years. So getting a little older in my career. Started out at CalPERS, which is the largest pension fund in America. Started out as an intern, became one of their youngest portfolio managers doing actively managed fixed income portfolio management. So while I was there, managed about $70 billion, had a really good track record, but saw a lot of the fiduciary duty issues where as a fiduciary, you have to put your client's interests first above anyone else's interest. Your own personal interest or your company's interest. You got to put their interest first. And there started to become clear pressure there to do things other than that. Like for myself, buy green bonds, which from like in one sense, I'm kind of agnostic about green bonds. Who cares? But if I have to buy a bond that has the exact same risk but trades at a higher price, that's a problem. If that's pressure to do that, that's pressure to that will explicitly cost the pensioners of California money. I didn't want to do that because California doesn't even have enough money to pay their pensioners. So I pushed back against that and really became passionate about the mission of Strive. Strive didn't exist My wife and I were working on the same idea. This smart guy from Ohio named Vivek Ramaswamy separately was working on the idea. And so he raised a bunch of money to launch Strive. We got connected because we were talking to similar people. And my wife and I actually were part of the Day One Strive team. But the Day One Strive team was people from all around the country that really cared about capitalism and preserving American capitalism and meritocracy.
What is Strive's view today on Bitcoin? You mentioned, so as an asset class, where we are in adoption and what any future use cases could be.
Mm-hmm. Yeah. So we have a extremely constructive long-term view on Bitcoin. And our recommendation is that Bitcoin belongs as a core allocation in the portfolios of most people. It's not a mandate if some people don't want it, right? And so we're not going to force it in anyone's, but our view is if you say, hey, Strive, hey, Matt, we trust you, manage our money, Bitcoin belongs as a core allocation, and it increases risk-adjusted returns. And it unequivocally does on a backwards-looking basis, but also on a forwards-looking basis, which obviously in investing is what matters, right? And in investing, when you say, okay, what are the long-term risk factors that exist in the globe, that exist in America that you want to hedge against and you want to take some risk to benefit from if they actually play out. And first and foremost, it's the global fiat currency crisis in this country. We have a massive debt crisis in this country. We have a massive debt crisis around the entire globe. It's not just the US. In some ways, the US is not as bad as many of the other countries, but everyone's printing money whenever there's a problem. And I view those sorts of printing the money as kind of like a drug, where the first time that someone takes a drug, you don't need a lot of it, and then you need more and more to get the same impact, and it leads to destruction. And I think that's a very hard thing to get away from. And my view is that so far you haven't seen actual tangible actions from any side of the political party to actually say this debt crisis is on a sustainable path. I'm hopeful when we think about a golden era for this country that AI could actually act as a change agent, that it's such a massive productivity enhancer for the country that it actually releases such prosperity for this nation that maybe that could solve it I would say that's by luck versus skill and actually being fiscally conservative. And I think that's TBD. But even if that was to happen, Bitcoin's going to be a beneficiary of an AI boom. And I think that AI agents will transact in Bitcoin with each other. I still think there's a lot of fundamental issues with fiat currencies. I think that we have a inflation problem in this country that Bitcoin benefits from. We have geopolitical tailwinds or geopolitical tensions, in this country and around the globe. And I don't think those relax. And it doesn't mean that we have to go into some physical war. It could be technological warfare. It could be all sorts of different things, but a lot of countries are mad at each other. And I think Bitcoin it's unfortunate that they're mad at each other. That's where our globe is, but Bitcoin also is a beneficiary of that. And I think it's the best savings asset, period. I don't think that there really was a savings asset post Great Financial Crisis until Bitcoin.
Strive has 13 or so, I believe, ETFs. Can you maybe walk us through those? And is that your main offering, or what other products or services do you currently have on the shelf, or are you looking towards moving forward?
Yeah. So Strive has two business segments right now, an asset management segment and a wealth management segment. On the asset management side of the business, we have 13 ETFs. 11 of them are passively managed equity ETFs like a BlackRock or a Vanguard ETF, but our differentiator is how we vote, and we vote strictly based on those principles that we were talking about. We have a firm foundation, and that foundation will never waver. It doesn't matter if ESG and DEI are popular or not popular. If you go to Strive, that's what you're getting, period. And I think that's been extremely unclear in the overall asset management industry. So that's the equity side. The fixed income side, obviously I have a fixed income background. We have basically like a cash-like one and a total return bond fund for people that want fixed income exposure in their portfolios. And then we're dipping our toes in the Bitcoin space with we filed for, a Bitcoin bond ETF, which, I can't talk about the details of that because it's not a live ETF. But I will say that there's a really interesting investment case for these Bitcoin bonds that these Bitcoin treasury companies are issuing. And there is a extreme lack of knowledge about them. Obviously, there's people like Ben Workman that we were talking about before that's doing great work, but that's kind of within the Bitcoin community that actually can't even buy these bonds, where when you actually look outside and you talk about these bonds in more institutional settings, they're just like, oh, they're going to blow up. And then my first response is, how? And like, do you understand them? And no, but it's crazy. And so then you actually start having a conversation. So even yesterday I was on CNBC in the evening and we were talking about this. And that was one of the first comments, is that I wouldn't touch those things with the 10-foot pole. And then we actually had a conversation about what would have to happen for these bonds to actually break, because you can break any bond, but you have to say what would have to happen. And then what is the probability that actually happens, right? And so we talked about it, and it said, my view is that the probability of that actually happening is near zero. These bonds are extremely hard to break. And if they are extremely hard to break, then you have to look at the risk return profile of them. And even in Bitcoin bear markets, they're very likely to return par. So they really have a really interesting risk return profile, where in many bear markets, they return 100 cents on the dollar, but yet they still provide a little bit speed limited exposure to the volatility of Microstrategy. But that's such a attractive volatile stock that 75% of that upside is very attractive upside. And so I think those make a lot of sense. I think bringing them to the masses makes a lot of sense. And we're looking at a couple other Bitcoin products as well. I think that as you think about Bitcoin as an asset class, I think there's room for a lot more products that I think would make for interesting investments in the Bitcoin ecosystem.
How big do you think that appetite or market is for that sort of a convertible bond ETF, I guess, specifically?
The demand on the retail side,
yeah,
I think is in the billions.
Okay.
And who knows, right? Is ultimately the market will speak of if there is demand, but these filings, they went viral, and but you also saw it beforehand. There's a very strong Microstrategy contingency of Microstrategy investors on X, and they're very intelligent, and I think that they see the attractiveness of them. I think that there's a lot of people that would like exposure to Bitcoin, but in a little bit of a vol reduced way, and there's also a lot of people that want exposure to fixed income. And you think about fixed income, and we had a 40-year bull market in treasuries. We clearly aren't going to have that going forward. So how do you actually put some juice in a fixed income sleeve of an asset allocation? Well, these convertible bonds make a lot of sense for those types of investors as well.
Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Do you subscribe to Michael Saylor's theory of we're in a gold rush for the next 10 to 15 to 20 years? And is that just kind of incremental, meaning you mentioned people disagreeing with you about whether something would break or not, and just maybe a general understanding or misunderstanding. Does the market have like an aha moment, or is it just like, how do we educate, like what's the best path for that moving forward? Yeah. How do you see that?
Well, every Bitcoin cycle, and we could debate if we're even in a cycle or a super cycle right now, but every Bitcoin cycle brings in more people that challenge their previous assumptions. Mm-hmm. Really, is the question is, if you've been wrong for this long, how much pride do you have before you say, okay, actually let me take a step back and look at this. Mine was actually taking a step back in 2016 after thinking Bitcoin was a scam in 2012, 2013, 2014, and then just getting your hands dirty, right? And to understand and appreciate an asset that has the volatility of Bitcoin or MicroStrategy, you can't do it unless you do your homework. You can't rely on yours or my education. I can't go tell a friend, hey, go buy Bitcoin, and then it drops 50% or 70%, and they're like, oh, this is a scam. I knew it. I sell it. I've seen that happen many times, and so you actually have to have your own conviction. And when you do, the nice thing about that is if you really have conviction, then you can start talking about higher levels of allocation to something because you truly believe, and then you can manage the emotional toll that volatility can play on one's net worth because you actually truly believe that this thing is going to do well over the long run. So that's part of it. I do think we're in a gold rush. I actually think that on the Bitcoin Treasury side, it's really interesting because, and I think a lot of people have different theories and just talking points on Bitcoin Treasuries, but the way I think about it is this. Since the great financial crisis, the cost of getting money, it was basically near zero. And so if you think about deploying capital or holding cash, you don't want to hold cash. And so companies then, they're very likely to either deploy cash for capital projects with an IRR of near zero, do stock buybacks, or issue dividends. That holding cash is kind of this clear loser. Well, Bitcoin treasuries are interesting because if the IRR of actual capital deployment becomes the IRR of holding Bitcoin versus deploying it, well, now you actually need to have a really good potential return on investment to deploy capital. Otherwise, maybe you should just consider holding Bitcoin and waiting. And so for me, there's obviously companies that are basically purely a Bitcoin treasury company, which that's how I would define MicroStrategy, even though they have a business. But for other companies that actually have a mission to do something, whatever that mission is, developing a war chest of Bitcoin is actually extremely powerful way to position themselves to maximally pursue that mission, not a Bitcoin mission, but their own mission when it's appropriate in the markets. And I think that will be a good thing as more people do that. And it might actually be the right time, especially with the AI boom, where that might carry some stuff forward. People start building Bitcoin war chests, the cost of capital goes down, and then they actually can deploy with a good IRR for their own corporate mission.
When you think about Bitcoin treasury companies, and arguably there's only a few right now if you measure by ones that hold over 1,000 Bitcoin or some other metric, do you view it as winner take most, meaning MicroStrategy, or is there potential for others to come along where they have some version of a leveraged strategy along with their operating company, and some might outperform others over certain time periods?
Yeah, I think there needs to be probably somewhere between 10 to 20 truly like all in on a Bitcoin treasury status, almost at the expense of the corporate mission. And I think that will actually unleash institutional capital for the concept of Bitcoin actually becoming a large scale asset class on the institutional side beyond just potentially buying Bitcoins. And part of that's because of the diversification, that you can't have that be true with only one company or two companies doing it. And there's a lot of learnings, even when you think about an ETF or something like that and meeting diversification requirements, you would benefit a lot by having a lot of people doing that. With regards to other companies, right now there's clearly a little bit like some marketing component, but I just think it's smart business. It's smart business to think about your treasury from a long-term perspective to pursue your mission, and that's not a levered strategy. But with the levered companies specifically, I think that they can differentiate themselves in different ways and have different risk return profiles that will appeal to different types of investors. And MicroStrategy is going to always be the 300-pound gorilla, right? And so they can kind of become the blue chip in the sense, and then there will be other companies that will maybe attack it in a little bit different manner. And I think that will even help MicroStrategy.
Do you see other products, either generally or specifically, that the market would want moving forward as we see hopefully more companies adopting the strategy and to your point, even in a levered sort of fashion, in addition to the ones kind of putting it on the treasury, but maybe not being levered long, so to speak.
Yeah, absolutely. Because ETFs as a vehicle allow for a lot of tax efficiencies. So right now, at least on the companies that are all in on Bitcoin strategy, Bitcoin Treasury, you need a couple more companies to do it, to actually implement a lot of the things that actually have true differentiation.
Mm-hmm.
But I think it's going to change in a major way, and just look at the different metrics that you can look at these companies by. How do you judge someone being a Bitcoin Treasury company? There's a bunch of different ways. Is it just 1,000 Bitcoin, or is it some sort of thing off of Bitcoin yield, or Bitcoin holdings divided by market cap, or you could keep kind of going down the line of all these different ways that you could think about how all in a company is.
Mm-hmm. or
you could try to do it for the new adopters. But I do expect that there will be substantially more Bitcoin type ETFs that are tied to these companies in the future.
Are there any sectors in addition to Bitcoin and AI that Strive is bullish on?
Mm-hmm. Yeah, our view, generally speaking, is that three things matter: AI, Bitcoin, and energy.
Okay.
And so energy matters a lot in this, and it matters from a government policy perspective, but how much energy a country produces will be directly tied to how much they're able to do with regards to AI and Bitcoin mining as well.
Mm-hmm.
And I don't think that energy supply is very slow moving. AI is very fast moving. And so I think that there's some potential for some dynamics there where, just as an example, when Trump became president, he's clearly going to be pro-energy versus the previous administration. He's going to do deregulation. Oil prices are higher. And why is that? I think a lot of it's because of this expected demand to come for energy.
Makes sense. Any other topic or that we should cover while we're here? And otherwise, I'll throw it over to you for closing thoughts. And where can we find you and Strive online?
Yeah, no, this will be great. This market is so fast moving. I think every couple months, probably this conversation will go a million different directions. And so I think, let's keep the conversation going as Bitcoin Treasury companies evolves, as the Bitcoin bond market evolves, and kind of where it's at, what's attractive, what's not attractive, what's going to happen going forward. It'll all be interesting conversations. But for where people can find me, you can find Strive at strive.com. Find me on Twitter at Cole Macro, and you can find Strive on Twitter at Strive Funds.
Great. Matt Cole, CEO of Strive. Thanks so much.
Thanks, Tim.